Well, folks, the stock market has entered stupid mode. Yeah, you might think, I'd never heard that term before. I didn't know that was a thing the stock market did. It entered stupid mode. Yeah, it is a thing. And yes, we have entered that, okay? And in today's video, I want to show you a lot of stuff that's going to absolutely blow your mind. And the stock market, Wall Street's prepping up for certain things. But in my personal opinion, some of these things they're prepping up for, the way they're prepping up for them doesn't really make sense. And if we look at history, you can kind of see how this is kind of illustrated out. And when I say the market's not acting with common sense, it's basically exactly what I mean. That's why I call it a stupid market right now, because the market is not acting with common sense. There's certain things that are transpiring in the market right now that I want to show you that it's not using common sense anymore. And this is being driven by other things that I want to explain in this video. So yeah, I hope you guys enjoy this as always. Also, FTX US, that is the crypto partner of the channel. If you want to sign up for that, check out pinned comment down there. 85% lower fees than competitors. Also, get yourself some free crypto whenever you set up an account and use referral code Holy Smoke us up to $100 in free crypto. Pretty awesome, okay? So first thing I want to start out here is looking at S&P 600 small caps, okay? You know, this is forward P's, okay, for small cap stocks. This is not right. This is not it doesn't make sense. It's not common sense. This is ridiculous, okay? I mean, these valuations have been pushed down so far low on small cap stocks. It is insane. I mean, this goes all the way back to 1999. And like I said, the only time period you could ever find things this insane is back in the 08-09 time period, essentially, where forward P's dropped that low for small cap stocks. You know, it's just ridiculous. That's the best way I can put it. Just absolutely ridiculous. We dropped down there in the Rona crash for like a day or two, and then we were right back up, right? And so, you know, if you want to talk about a market acting with no common sense, I think that's a pretty good part to start there, okay? Now, this is more stupid in my personal opinion, okay? This is absolutely insane, okay? Now, this is a heat map for the day, for obviously the market and whatnot. But specifically, I have this highlighted here, okay? Why do I have this right here highlighted? Well, I'll tell you exactly why. The energy sector has been a place where Wall Street's been flooding money in very recently, okay? They're flooding money into the oil and gas stocks, like flooding money in, like left and right? Now, if we know about oil price or gas price over time, right, what do we know about this? It's a supply and demand game, right? If you knock off a bunch of, let's say supply and the demand's really high, obviously oil prices are going to go higher, right? But the market's really acting in no common sense, in my opinion, right now. And here's why. They're funneling all this money into these oil and gas stocks because oil prices are elevated right now, right? And could remain elevated for at least the next couple months. But the issue with this is, okay, and this is going to be a big issue, is the market also simultaneously is telling us that it thinks there's going to be a recession, if not a big recession, right? And so last quarter, you could have seen GDP obviously go down, right? And so they're thinking, okay, GDP goes down again, and let's say that's a situation that happens. Next thing you know, all of a sudden we're in a recession, right? Which is what the market's prepping up for. Let's be very clear about that. Well, in a recession, oil does not do well in a recession. Let me just put that out there. It does not do well in a recession. That's not what happens. You look at what happened in 2020. Obviously, look what happened. I mean, the price of oil, that was a really dramatic situation. Not only did oil go down, oil went literally negative, which is just like ridiculous to even think about. Like, I didn't even know we could ever see it like a day like that in my lifetime where oil price would be negative. Like, what? Okay, that's how dramatic it got. But if we go back and we do a little history lesson. Well, the last time we had a major recession in the United States of America, right, outside of the 2020 situation, was in 2008, 2009. And look what happened to the price of oil during that time, okay? I think this was an inflation-adjusted chart. But nonetheless, it tanked. That's the best way to put it. It tanked through the floor, and it was down for about a year and a half, 2 years. And then it finally started coming back as the economy started to slowly come back. And, the folks started to kind of get a little more confident in the market. It slowly but surely started to come back. But we hit the lows around January, February for oil prices of 2009, right? And so if you're the stock market, right, you're Wall Street, and you're thinking, oh, there's going to be a major recession. Well, guess what? Oil price will drop if there is a major recession, because in a major recession, obviously you don't have the need, because all of a sudden a lot less people are traveling, a lot less people might be placing orders for things, right? Which transportation goes down, trucking needs goes down. That's the way it works, right? And simultaneously, if you had a buildup, which if you've been looking and tracking like oil wells and things like that, how many have gotten up and running recently, obviously there's a lot more supply coming online. And so if all of a sudden you have all this supply coming online because oil prices have been high, and simultaneously you get a big recession all of a sudden out of nowhere, right? And demand for oil starts going down. All of a sudden, next thing you know, guess what's going to get hit? Oil price is going to get hit. Oil and gas stocks are going to get hit in a major, major way, right? Which goes back to this kind of common sense thing where the market's just not thinking with common sense. What the market's thinking with is, we think the oil price might be high for the next couple months, so maybe we can suck a little money out of this for the next couple months and then trade out of it before the collapse happens, if that does happen, if the economy was to really go south, okay? And that in a nutshell is Wall Street, right? And it's just extremely disappointing because it's just so short-term like thinking in nature, right? And it's kind of like who's the last one to hold this thing, right? Before it starts going down in a major way. Now, if there's not any sort of recession, then guess what? Oil price should just be fine. It should be fine. It should hold up pretty decent, right? But if there's a major recession, don't fool yourself. Like, oil price will go down. That's the way it works. That's just how it goes. Okay, major recession, oil price goes down. Okay, that's the way this whole game works. So this is something that really, really keep in mind there. Okay, now, a Shopify stock. I think this was a perfect stock to bring up here. Okay, and kind of trying to make sense of a market that has no common sense right now. Shopify, let's be very, very clear, great growth company, tough year-over-year comps, but still growing pretty darn nicely. You look at their last quarterly results with incredibly tough comps. Shopify is the type of company that's going to be massively bigger 5 years from now, 10 years from now than it is today. And I think anybody with any common sense would know that, right? But when it comes to Shopify, this stock's now 72% year-to-date. 72% year-to-date. I actually had to step in and buy a little shares of Shopify here today, okay? Because it's gone down that day much. And I'm like, holy smokes, like think about Shopify for a moment, okay? Just think about this, right? What is the type of stock folks are going to want to hold as soon as this drama period is over? Stocks like Shopify. Let's be honest. People want those sorts of companies because they have that insane level of growth for the next 5-10 years. That's why people like stocks like Shopify. And so as soon as this little drama time we're going through right now, right? As soon as this ends, stocks like Shopify have insane upside, and those are the stocks that people want to be in. Okay, people want to be in the big growth companies, the companies that have those type of multi-$100 billion type opportunities or $1 trillion type opportunities. That's where people want to flood money at the end of the day over the long term. In the short term, they're selling off the Shopify stock at any price. They'll say, like, I don't care, 500, 400, 300. I just need to get rid of my shares. Just whatever price. Give me $5 for these shares. I don't even care. And that's just a market with absolutely no common sense right now, that they're willing to just say, I don't want it. I don't care. Give me anything. Give me anything for the stock, right? For a company that has a great management team, that's proven they've had a great management team, that has incredible growth and is going to grow like a beast for the next 5-10 years. And they're just like, I'll sell it at any price. Just give me whatever. $378, I'll take it. That's the moment we're in time in Wall Street right now. And here's the thing you got to understand about Wall Street money, right? This isn't usually their money. It's just not. Most of this money is not the person that's selling off that Shopify stock here today, right? When it's down 8%. That money is other people's money, okay? Let's be very clear about that. The fund managers, all these Wall Street people, they're running other people's money. They might have a very small amount of their own money in there, but this is other people's money, okay? So it's not like this is their personal $100 million position in Shopify that are like, no, I guarantee you, if the people that are selling off this Shopify stock today, if this was their own money, they would not be selling the stock at $300 something here today. I guarantee you that. Because they would look at it and like, yeah, we are going through this drama time right now, but I'm not selling my Shopify shares at $300. That's the way it would be. But when you're talking about most money, the far majority is not these people, the one that's making that sell decision today, right? It's machines, algorithms that have no feelings about anything, right? And it's individuals that it's not even really their money that they're selling off. So they're like, oh, Shopify's going down 300. Okay, that's fine, sell. And it's just no emotion in it. There's no thought process in it. There's no common sense. Machines don't use common sense. Machines use algorithms and, oh, this stock dropped to this price, this index dropped to this price, so we need to sell at this price. Oh, this limit order got hit, so we need to sell at this price. And that's the way these things think. They don't think with common sense. Machines don't have common sense. And I can tell you, Wall Street usually doesn't have common sense either. And they will sell stocks at whatever price because it's not even their money. It's not even their money. Like I said, if this was their money, dude, they wouldn't be selling the stock here today. That's just bottom line. There's just no way they'd be like, let me sell my Shopify shares. I bought it at $1,000. Let me sell this for $378. No way. Okay. PayPal. Another perfect example of the stock market not using common sense. This company owns PayPal and Venmo, two of the biggest financial apps in the entire world. Bottom line, okay? The stock's down 58% year to date. It's been absolutely devastated. The company's trading under $100 billion market cap now. It's trading at a price to sales ratio in the threes now, which is just ridiculous. A PE ratio of 27, a price to book of 4.6. Great management team, great balance sheet. Obviously they just kind of really, really tough year over year comps right now. They've had to go through the last few quarters, but that show's about to get over, in my opinion, at least as far as the tough comps. The comps start to get easier and easier as this year transpires and goes along, right? And here you are looking at the stock just absolutely devastated. And people selling this stock, machines, people, whatever you want to call it, selling the stock off at $81 here today when it's down almost 58%. That's not common sense. That's stupid. That's literally stupid. Like, what are you doing? Okay? You're going to sell that stock off at this price? Okay. You're literally giving away shares. But when the machines are making the decisions and when individuals that it's not even really their money is making the decisions, you got to understand the way these fund managers work and things like that is they try to follow each other around. They're trying to keep up with indexes. And so if they're in a situation here where the entire market's getting nailed, right, they've got to sell off stocks that are doing really bad. They don't want to be known as the guy that's holding PayPal right now. PayPal is getting devastated. And so you want to be known as a guy that's holding oil and gas stocks right now. If your clients come to you and they say, hey, what we got in our portfolio? You come out and you say, oh, yeah, PayPal. Your clients are like, what? PayPal? I think that stock's down like 70%, isn't it? What am I paying you for? I could lose my own money. That's what they'd be saying, right? But if you're a fund manager and you say, yeah, I got Exxon, I got Chevron. That's what we got in our portfolio right now. They say, oh yeah, those stocks are doing good. Oil and gas stocks, woohoo! There's no success necessarily in the fund managers going out there to buy PayPal right now, because even if you're buying at 81, people are going to assume you might have been buying at 200 or 300, right? And so they'll group you into that category and say, oh, you're a bum because you bought it. That's just the way it is. They're like, oh, they associate the performance with how you're doing, right? And so the guy could have traded out of some stock last week and all of a sudden put his money in the oil and gas stocks, but he's like, oh yeah, that's where we're positioned right now. And people don't keep up with the markets very much. I'll tell you that. You guys do, and I do, but a lot of people just don't. 99% of the population doesn't. And so that's just the way it works. And so you come out and say, oh yeah, I got oil and gas stocks. People are like, oh yeah, good job, man. Good job. You're doing a good job. And it's ridiculous, but it's what happens. It's what happens on Wall Street all the time. It's not common sense. It's just stupid. Okay. That's the best way I could put it. Netflix. I put this up here. The market is messed up when Jeremy sticks up for Netflix. Yes. Netflix was a stock for a long, long time I kind of railed against, right? And that the valuation was too high. And things like that. And this was, years ago. And now the valuations come. I just today, for the first time in my life, I bought some Netflix shares. You know how messed up the market has to be for Jeremy to buy some Netflix shares? That's when you know things are screwed up, okay? But I'm looking at the stock is down 70% year to date. The death of Netflix has been greatly exaggerated, I would say. And, at a P ratio of under 20, I'm like, I'll take the risk. Okay, you want to sell me Netflix shares at $100 something? I'll take them off your hands. Machines, Wall Street. And like I said, if this was the real people's money, like there's no way they're selling Netflix at $100 something a share. Like common sense just tells you, no, that's not a good move to make. If you don't want to buy Netflix at $100 something a share, fair play. I can understand that, right? It's like, I might see better opportunities in the market. Fair. But to sell Netflix at $100 something a share? Come on, man. And so this is a market that's just acting with absolutely no common sense. And the thing you got to understand about a market like this, it can act with no common sense for weeks or months. It's not like this is just like it's got to be over tomorrow, right? It can keep going on for weeks or months into the future where there's no common sense. It's not even about valuations anymore. It starts not even being about a recession. It starts being about, I think the stock's going down, so it might go down more. That's what it starts to becoming. And that's when you're not operating on common sense anymore when you start thinking like that, right? The first thought process is, maybe the valuation's a little high, growth rates aren't being hit, we need to sell off this stock. And then it's like, maybe we have a big recession coming or something, let me sell the stock off because of this. But when you start reaching these ultra levels of no common sense, that's when you reach the levels of like, it's going down, it might go down more, so let me sell the stock. And that's not operating on common sense anymore, okay? I look at a stock like Oatly with just ridiculous growth rates, and the stock's $3 a share today. I'm just like, okay, give me some more Oatly shares at $3 a share. And the thing you got to understand, if folks don't want to buy Netflix and Shopify and PayPal and big tech companies like that, a stock like Oatly just has kind of nowhere. Like who's buying that stock other than maybe me today, right? You look at a stock like Honest. I mean, they sell diapers, they sell wipes, they sell makeup products. Like regardless if there's a recession, no recession, it doesn't matter. Like Honest is going to do great. Oatly's as well. Like these sorts of companies, it literally doesn't matter. They're going to do well. And in this sort of market, the whole Honest company sells for $300 million right now. It's a complete joke of a market we're in right now. It's not using common sense at all. I'll give you an analogy, okay? So you ever walked into a really dark room, like let's say you were outside in the pool or something, and then you come inside and you go into a really dark room and you're trying to find the light switch or something like that, right? How do most people walk? They kind of walk like slowly, especially if you don't know the room well, because you don't want to like walk into something or like walk into a wall or something like that because you can't see anything. So you kind of are walking a little slowly, right? And trying to like walk your way around. That's how everybody who's not literally insane does it, right? And so the market right now is having trouble seeing. It's just in the dark right now. They're scared about inflation. They're scared about the Fed. They're scared about recession. They're scared about stocks could go down more. So I got to get out today because next week it might be even lower. They're scared about returns. They're scared about outflows of money. They're scared about missing the indexes. There's so much Wall Street's paranoid of and scared of right now, right? So they're in a dark room. And so they're scared. And so naturally, they're not going to really make any sudden moves right now. That's just the way it is. You're in that market. And until the light switch is hit, they're scared to do anything. The light switch being hit, that moment for me at least, is when the rate of increase of inflation starts coming down. I think May 11th is a very important day. And if it doesn't come down then the next month will be a very important day. That's the light switch moment for the market. When that happens, then the market can begin, keyword is begin, to see the light, right? And it could be, the room goes from pitch black dark to at least there's a little light coming in now and we can kind of see where we're going, right? The next step after that would be the Fed. Let's imagine the rate of increase of inflation keeps coming down like month after month after month. The next stage to really put the lights on would be a stage where the Fed maybe raises rates next time. And then they say, yeah, we're going to just take this at the moment. We see inflation coming down. It's possible the next raise could be a quarter, 25 basis points, or maybe we don't raise it all. That would be the next stage of light for let's call it the market, right? The next stage of light after that would be a scenario where we don't go into a major recession. That would be the next stage of light for this market. But right now, we're just in a complete pitch black room, and Wall Street's scared to make any sudden moves at all, right? And call it what it is. The market is a falling knife right now. I know you guys probably have heard the expression of, I know I love to buy stocks that are falling knives, and I'm not scared to do it. I'll catch those knives all day, and I get my hands sliced all the time. but it's what I've been doing for 14 years, and that's what I'll continue to do as long as I'm in the stock market. I'll catch falling knives left and right. I'm not scared of it. It is what it is. I know I'm going to get sliced. I know I'm going to get bloody, but it is what it is. Like, I'm just about that life. And when it comes to market, we got a falling knife market. This market is down over 23% year to date. Let's call it what it is. This market is collapsing. This market is crashing. We have not seen a start to a year through the first 5 months anywhere even remotely close to this right now. And it's a market in which the market's, so what I'm doing, I'm buying stocks that I love for the long term, loading up on shares. That's my plan this entire year, sticking to the plan, and I'll continue to stick to it. And, regardless if there's a recession, no recession, if Wall Street wants to start buying stocks, so they keep selling stocks, regardless, I'm going to continue to buy stocks this entire year. I don't care. I will catch the falling knives all day long. And that's just what's going on. That's where I'm at. And the rest is a game show. I'll call it that. Okay. Hope you guys enjoyed this video. As always, make sure you check out FTX US, the official crypto partner of the channel. 24/7 customer support, 85% lower fees than competitors. Get yourself some free crypto. Check out pin comment. Use Holy Smokers referral code. Much love and have a great day.